Hello and welcome to another new video from Siderograph.com. In this video, we're going to go over the upcoming turn dates on July the 1st and July the 5th of 2016. So I received an email earlier this week where someone asked about the upcoming July 1st turn date, and the person was asking if I had performed any detailed historical analysis to see what historically had happened when we've had this type of turn date in the past. So I actually created a new spreadsheet to be able to answer that question, and I think it will be very useful going forward in finding out historically how well have these turn dates performed. So first, let's take a look at the declination's turn date coming up. So you'll see that back on February the 3rd, we had a low in the declinations, and on July the 1st, we have a high in the declination that's coming up. So historically, in the past, what has happened when we've had a declination high like this? So to answer the question, I started with this tab, and if you've taken a look at the Advanced Astro dashboard, this tab might look familiar to you. So I simply came over here and I filtered for dates where there was a declinations power of 100 out of 100, and then I used this tab here to basically filter for only the dates that were the highs and to not include dates that were the lows. Separately, just for informational purposes, I did also look at the lows. But because this is a high, that's what I wanted to focus in on. So after doing that filtering, we're left with a series of dates. And the idea is that if we take those dates, we can look to see historically what happened for those historical dates, both before them as well as after them. Did they typically result in a trend change, or did the trend that was happening before simply continue in the future? Okay, so now that we have filtered for those historical dates, we can copy them. And one thing that I'm going to do is only pull the historical dates. So you see I'm not going to pull the July 1st, 2016 date or dates in the future, simply because we don't have historical data for how those dates performed. So I'm only taking the historical dates. And then on this tab, I'm simply going to paste those dates. So what the tab on this spreadsheet is going to do is it pulls the price for that date. So for example, for June the 6th of 1900, it pulls the price for that date as well as the price for 54 days before, 55 days before, 56 days before, all the way to 60 days before and 60 days after. So it finds out what was the price for June the 6th of 1900, and then it looks back 60 days and it looks forward 60 days to find out how did the price of this stock index change before and after. So for this analysis, I simply use the Dow Jones Industrial Average because there's the most data on that as compared to other securities, but we could have done this for any security. So if you come down below here, you can see that we also take a look at the percent change. So if we look at the first date, June the 6th of 1900, we can see that 60 days before then, the price of the Dow Jones was 48.46. And you can see that on that date, it was 41. So the Dow Jones actually went down pretty substantially between those two dates. So on that turn date, it was $41 on the turn date, and it was $48 before the turn date, 60 days prior. So 2 months prior to the turn date, it was 48. So it went from 48 to 41. So it decreased pretty substantially in the 2 months leading up to that turn date. And then if we look to see what happened at the end of the 2-month period, we can see that it went up from the 41 to 42.27. So you can see that it went up slightly, or you could say that it was roughly flat from the time period 2 months after the turn date. So what we did was we compared those via percentages. So you can see here that it shows that the stock price, the price of the Dow Jones, went down 13% between 2 months prior to the turn date and the turn date itself. And the results, it basically shows for 2 days, 3 days, 4 days, all the way up to 60 days prior to and after the turn date, what percent of the time was there an uptrend before the turn date, and there was also an uptrend afterwards. So to pick a random date, right here is 25 days prior to and after that turn date. So 35% of the time, there was an uptrend in the 25 days prior to the turn date and the 25 days after the turn date. Whereas here, 31% of the time, there was an uptrend before the turn date in the 25 days before, and in the 25 days subsequent to the turn date, there was a downtrend. So this helps break it up into different categories. And what we're concerned with is the percent of times that there was a change in the trend. So we're adding up all of the times where the trend changed as compared to when the trend stayed the same. So over here we can see what the results look like for the declinations. The one that we probably care the most about is the one that corresponds to declination highs. So that would be this green line right here. This is basically what the results look like for all of the historical instances where there's a declinations power of 100 out of 100, and it was also a high. The red line here is also the declinations power of 100 out of 100, but this focuses on when the declinations were at a low, whereas the July 1st date that's coming up, it's going to be a high. And instead of just looking at historically what has happened, let's also look to see what has historically happened on average. So the spreadsheet tab that I was mentioning earlier, I set it up so that it can handle up to 1,300 dates. So I took a random sample of 1,300 dates. I simply used the rand function in Microsoft Excel to randomly select 1,300 dates. And you can see this gray line here. So this gray line here, this basically is what the results look like for 1,300 dates that I randomly selected. So you can see that on average, for the typical randomly selected date, less than half of the time there was a trend change associated with the date that was selected. However, in contrast, you can see that the red line and the green line are noticeably higher than the gray line, which means that historically, when there's been a declinations power of 100 out of 100, it appears that that has historically tended to result in changes taking place more often as compared to a randomly selected date. So the one that we might be more focused on, once again, is when there's a declination high, because the July 1st turn date is a declination high. So the one that the dates before and after that resulted in the highest high was 16 days before and 16 days after. So if you look back historically for declinations with a power of 100 out of 100, the time where there's the biggest noticeable change in trend was 16 days prior to that date and 16 days after that date. So if the date that we're anchoring to is July the 1st, if you go 16 days before that and 16 days after, you're left with June the 15th and July the 17th. So that means that we could see a change in trend between these three dates. So the trend between June the 15th and July the 1st could change between July the 1st and July the 17th. So for example, if we see an uptrend between June the 15th and July the 1st, we could see a downtrend between July the 1st and July the 17th. And just to wrap up on the lows and the highs, if you look at the highest point for the lows and the highs, there were 22% more turns here and 22% more turns here as well. If you compare how often turns took place when there was a declinations turn date of 100 out of 100. So that's pretty compelling. And if you just eyeball it, you can see that the red and green lines tend to be somewhat higher than the lines for the 1,300 randomly selected dates. So let's also take a look at the Bradley Siderograph date. So if we recall back to the beginning of this video, we were talking about on July the 5th, there's a Bradley Siderograph power turn date of 100 out of 100. So historically, when that has taken place, what has been the result? So over here, you can see a graph of the highs. So let's talk about, once again, what the highs and what the lows are. So if we come over here, we can see that, and this is just one example, this is the graph for gold. So you can see that here's a high in the Bradley Siderograph, and here's a low. So just to be more comparable, I wanted to compare highs in the Bradley Siderograph that were turns, and I wanted to compare lows in the Bradley Siderograph that were turns, just to be a little bit more precise. And it looks like the price of gold has pretty closely followed the Bradley Siderograph in recent months. So once again, what I was trying to do was to take, when there's a Bradley bars power of 100 out of 100, I wanted to compare all the highs and separately compare dates like this, November 29th of 2016, dates that are lows. Okay, so if we go to look at the results, we can see that this is even more substantial than the declinations turn dates. You can see that for highs, 8 days prior and 8 days subsequent to the turn date tended to result in the biggest difference. So it's true that throughout pretty much the entire period of 6 days prior to and after and 20 days prior to and after, there was more likely to be a turn for the Bradley Siderograph turn dates with a power of 100 out of 100 as compared to the average day. So that does indicate to me that this has been associated with the market turning more than the average day. And you could say even more so for lows, to a slight extent. So if you take a look at July the 5th of 2016, if you go 8 days prior to that date and 8 days after, you get to July the 1st, 2016, which means that we could see a change in trend between what's happening between mid-June and early July, and then early July and late July. And this right here is one of the most striking items. So for the 1300 randomly selected dates, if you go 20 days prior to the date and 20 days after, less than half of the time was there a change in trend. Whereas if you look at lows in the Bradley Siderograph, where there's a value of 100 out of 100, 63% of the time, 2/3 of the time, it resulted in a change in trend. So that's why when we get to later this year, on November 29th, 2016, that's why I'm especially looking toward that one as well, to see if the market changes direction on that date. So these numbers right here, this was all run just for the Dow Jones Industrial Average. We could have used any security. I thought this would be a good one given the long price history of the Dow Jones Industrial Average, but I thought it was a good place to start. So I hope this video helps you have a much better understanding of historically what has taken place in the past when there's been a turn date. And if you have any questions, please feel free to send me an email or to leave a comment on this YouTube video. Thanks.